Intel Corporation, one of the world's largest semiconductor chip manufacturers, reported second quarter earnings on July 27. Revenue was down 15% to $13 billion year over year. Gross margins shrank by 17% to 36%. A closer look at revenue by division saw the Client Computing Group, their largest business line, post $6.8 billion, down 12%. Data Center and AI generated $4.0 billion, down 15%. Network and Edge just under $1.4 billion, down 38%. Mobileye had revenues of $454 million, down 1%. The one bright spot was Intel Foundry Services, though a small percentage of their total business, came in at $232 million, up 307%. Returning to the financial statement highlights. EBIT was negative $1 billion, down 45% year over year. EBT at negative $800 million was down 10%. But their bottom line was $1.4 billion, up 426%. Intel reported a tax provision of $2.3 billion. In Q2 2022 they reported a provision of just $454 million. If we reduce the tax provision to the same amount they received in 2022, then the company would have reported a net loss for this quarter. Earnings per share, thanks to the tax credit, was 35 cents. Sales per share were down 17% to 3.1x, cash per share dropped to 2x, down 27%. Book value was slightly lower to $24. Annualized PE was 24, where the S&P 500 PE is 25.83. Of course, earnings were from the tax credit and the PE should be negative. Shares outstanding increased by 2.3%, negatively affecting the per share ratios. The debt ratio and debt equity ratio, while still reasonable at 0.25 and 0.46 respectively, they were impacted by an increase of long-term debt to $46.3 billion, up 22% year over year. Liquidity ratios show that Intel can cover its short-term liabilities, with the current ratio at 1.6 and the quick ratio at 1. Cash to current liabilities at 0.3 is slightly down, but they also have $16 billion in marketable securities, almost double the cash. Return on assets at just 3% and return on equity at 5.9% make it clear that Intel is underperforming. Again, these numbers would be negative if not for the large tax benefit they received. Free cash flow stands at $8.4 billion. Operating activities were just $1 billion. Investing activities reported an outflow of $11.3 billion. Financing activities were up 259% due to the issuance of long-term debt. And the dividend pays 12.5 cents, yielding, annually, 1.4%.